Welcome to The Explainer. Today, we're going to cut through all the noise surrounding Bitcoin's price and get to what's really happening on its public ledger. And to do that, we are diving deep into the work of on-chain analyst Chekmate to decode the story the blockchain is telling us.
You know, Chekmate really hits on a core truth here. Fear and greed, they've been driving markets forever. What's so incredible about Bitcoin, though, is that its ledger is completely transparent. It lets us see all that raw human behavior playing out in real time in the data itself.
And that's really what on-chain analysis is all about. It's like reading the digital fingerprints left behind by every single transaction. It tells this incredible story of when people bought, for how long they held on, and the exact profits or losses they took. It's literally the history of every single decision ever made on the network.
So to really get a grip on what's happening in the market right now, we're going to borrow this brilliant framework that Chekmate uses. We're going to look at the data through two different sets of eyes. First, the cautious analyst who sees all the potential risks, and second, the optimistic HODLer who sees all the opportunity. Okay, let's get into it. First things first, we need the right tools for the job. So let's get ourselves equipped with the three key on-chain metrics the analyst uses to see what's actually happening just beneath the surface of the price chart. All right, first up, we have what's called the realized cap. The best way to think about this is as the collective cost basis for the entire network. So instead of just looking at today's price, it values every single Bitcoin at the price it last moved. This gives us the grand total of all the dollars that have actually been invested. And right now, that number is over $1 trillion of real skin in the game. Next is the MVRV ratio. This one is all about the incentive to sell. It compares the current market price to that realized cap we just talked about. And that shows us just how much unrealized profit is sitting on the table. Are investors sitting on a 200% gain and getting tempted to sell? Or are they underwater and much more likely to just hold on tight? And finally, there's SOPR, which shows us the actual result. It measures if the coins being sold on any given day are on average being sold for a profit or at a loss. A really high SOPR can signal a market top because everyone's cashing out. A low SOPR, on the other hand, well, that often signals a bottom, as panic sellers are finally giving up. So here's the billion-dollar question. What is this toolkit telling us right now? Let's start with Check the Analyst, who's looking at all this data and, frankly, is seeing some pretty worrying signs.
Yeah, this is the critical question the analyst is asking. After such a strong run, there's some really compelling evidence suggesting that the bullish momentum we've all been watching might just be stalling out, and that could be putting the market in a really precarious spot. And here's exactly why the analyst is getting concerned. We are seeing a massive wave of selling. We're talking billions of dollars a day coming from people who've held Bitcoin for a long time. So far, this selling pressure has just been so immense that it's completely swamped even the historic buying we've seen from the new Bitcoin ETFs. For the analyst, this number right here is everything, $95,000. Why? Because a drop below this price would mean that 62% of all capital ever invested in Bitcoin would suddenly be underwater. That could easily trigger a huge cascade of selling and potentially kick off a true bear market. It's a real line in the sand. But wait, that's only one side of the coin, right? The holder is looking at the exact same data and has seen a completely different story, a much, much more bullish one unfolding before their eyes. It really is a tale of two tapes. Where the analyst sees this overwhelming bearish selling pressure, the HODLer sees something else entirely, an incredible bullish buy wall of demand that is absorbing every single coin being sold without letting the market totally collapse. Just think about this for a second. Despite historically huge levels of selling, the market's deepest pullback has been only 32%, and even then it only lasted for a few hours. This shows an absolutely immense underlying strength and a remarkable level of demand that is just quietly soaking up all of this supply. So from the HODLer's perspective, the funniest outcome, which, is often the most likely thing to happen in markets, would be for the price to just suddenly rip to new all-time highs from here. An outcome like that would catch all the cautious sellers and the short traders completely off guard, forcing them to buy back in and adding rocket fuel to the fire. Okay. So we have these two incredibly powerful, totally competing narratives. With the market at this critical point, let's look at the key price levels that will most likely decide which one of these stories ends up winning out.
So, just like we saw, a break below $95,000 is the analyst's big danger zone. But on the flip side, a sustained move above $118,000 could signal a major bullish breakout. I mean, we could be off to the races. Everything in between those two numbers, that's the battleground, where the bulls and bears are fighting it out for control right now.
At the end of the day, all this on-chain data is just a reflection of human decisions. It presents this fascinating puzzle with two very, very different solutions. The cautious analyst sees the risk, the optimistic hodler sees the opportunity. So the only question left is, which story will Bitcoin's ledger write next?